Chris, great to have you back on. Is a crypto winter actually coming here?
Well, winter's here, but I'm not sure crypto winter's right here for us yet. I think it's important to take a look at where it all started. We look back to January 2020-21. Bitcoin was trading 32,000 versus 36,000 now. Ethereum about $800 versus $2,400 now, and Solana an eye-popping $2 versus like $90 now. So while there has been a lot of selling pressure recently, the year-over-year gains are still pretty impressive and indicative that the market is growing and adoption is continuing.
So what are some of the key factors that you're watching from your standpoint at Cumberland as we are seeing this volatility in the price and we are seeing Bitcoin and Ether and some of these other crypto assets trade as if they are higher risk assets along with tech stocks and growth and everything else?
I think that's a great observation. We are seeing crypto act a lot like high growth tech stocks with the bigger beta to the market itself. But the beauty of crypto is you can kind of look past the price process and look for on-chain analytics to try to explain what you're seeing. And most notably, I think there's two things we want to look at. The first is on-exchange assets. What we've seen here is that it is at its lows relative to the past 3 years. Now, typically retail participants store their assets on these platforms. So if those are at 3-year lows, it's indicative of retail selling. On the opposite side of the coin, if we look at the on-chain analytics for long-term holders of Bitcoin, somewhere on the order of about 80% of Bitcoin assets are held in these long-term holding and accumulating wallets, which are typically associated with institutional investors. So while we have retail selling on one hand, we have some strong indications that institutions are continuing to accumulate and not sell despite the high selling pressure that we're seeing. So there might be some more to the sell-off in the future, but I think there's really a base being put in on the institutional side.
That is really interesting to hear, because I'll tell you, we were having a conversation about Bitcoin and the other cryptos yesterday. And one of the points that was raised in that discussion was the fact that as we have seen institutional investors, hedge funds, the like, come into this asset class, it has been treated more as a growth or a growthier or riskier asset, hence the downdraft we've seen alongside something like the S&P 500 and the fact that the two have become so correlated. And you're telling me that's the opposite.
I'm not saying that it's necessarily the opposite.
Okay.
I think what we're seeing in the price action right now is very similar to what we're seeing in equities. My point that I'm trying to make, though, is that when you peel back the surface price dynamics, there's a transparency to the underlying activity in the marketplace that is indicative of institutionals continuing to hold for longer periods of time, despite the retail selling pressure that we're seeing.